Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Philippine economy cools sharply. Growth slows to just 4% in the third quarter, well below expectations. The BIR warns of weaker collections this quarter amid the ongoing flood control corruption controversy. Hunger surges nationwide. 22% of Filipinos say they went hungry in the past 3 months, up from 16% in June. And in the United States, 10% of flights at 40 major airports are grounded as the government shutdown there drags on to its 36th day. First, let's take a look at how global financial markets performed overnight. U.S. stocks closed lower as the tech sell-off resumed and investors weighed mounting economic uncertainty and overstretched valuations.
I think the concern is because there's a lot of conflicting data points that come out. And the Challenger today, I think, was the worst data we've seen in 22 years in October. I think it's the second largest amount of job losses in a year since 2009. And reading that at face value, boy, that's awful. Then ADP came out and they saw job growth in October. So it accelerated, and then we had 2 months that wasn't accelerated. So I think right now, if nothing else, whatever side of the aisle you want to be on in terms of is the economy slowing or is it weak, is it growing or slowing, you're going to be right, because the economy, you're going to find data points that give you that.
The Dow Jones Industrial Average fell 0.8%, the S&P 500 down by 1.1%, and the Nasdaq down by 2%. Over in Europe, markets ended lower as well. The UK's FTSE 100 lower by 0.4%, Germany's DAX down by 1.3%, and France's CAC 40 down by 1.4%. Here at home, tax collections could take a hit as the flood control corruption scandal widens. The Bureau of Internal Revenue now expects a dip in Q4 revenues, a sign that the controversy is reaching the government's own cash flow. Commissioner Romeo Lumagi Jr. says the BIR had been hitting its collection targets in the first half of the year, but admits that the ongoing flood control issue is starting to drag on tax inflows. In August, the BIR launched a tax fraud investigation into contractors linked to the projects identified by President Ferdinand Marcos Jr. back in July. The bigger worry, a slowdown in infrastructure spending and delays in project payments could further pressure economic growth and business confidence heading into 2026. Now, credit growth is losing steam. Bank lending in the Philippines has slowed to its weakest pace in over a year. Total loans rose 10.5% in September from a year earlier, barely moving from August. The cooling came mainly from business lending, which grew just 9%. Construction loans inched up only 3.5%, while real estate lending edged higher by 9.2%. Consumer borrowing remained the bright spot, jumping 23.5%. The Bangko Sentral ng Pilipinas cut its benchmark rate to 4.75% in October to prop up growth. But analysts warn that lending could stay sluggish through the year end unless confidence and investment pick up. Now, in other news, the government is rolling out new rice measures, a two-pronged strategy of flexible import tariffs and a national palay floor price to protect farmers and keep rice affordable by 2026. Agriculture Secretary Francisco T. Laurel Jr. plans to raise tariffs on rice imports to help stabilize local palay prices. The new rates may range from 20 to 25% under the Economic Development Council's approved flexible tariff system of 15 to 35%. At the same time, the National Food Authority has launched its Pricers scheme, setting the government's buying price for palay between 17 and 30 pesos per kilo. The program establishes a national floor price and mandates direct procurement from local farmers, a move expected to lift farm gate prices and cut reliance on imports. Right now, the NFA buys palay at 17 to 23 pesos per kilo, while retail rice prices remain high at 43 to 55 pesos per kilo. More Filipinos went hungry in the past 3 months. Involuntary hunger rose 22% in the third quarter, up nearly 6 points from the previous quarter, according to the latest Social Weather Station survey. The nationwide poll of 1,200 adults found that 16.7% experienced moderate hunger, while 5.2% reported severe hunger in the past 3 months. Metro Manila recorded the highest rate at 25.7%, followed by the rest of Luzon at 23.8%. Hunger dropped in the Visayas to 17.7%, but rose in Mindanao to 19.7%. Malacanang blamed the spike on the recent calamities that disrupted food supply and relief operations. The Agriculture Department is studying a localized price freeze on selected farm products in areas hit by Typhoon Tino. Undersecretary Claire Castro says that the government is expanding its Walang Gutom and special feeding programs to reduce hunger and to restore food access nationwide. Now, at the Philippine Stock Exchange in Bonifacio, Global City, President Ferdinand Marcos Jr. is leading the opening bell ceremony for Maynilad Water Services Incorporated, marking its official listing and the start of today's trading. Let's get the details from Paolo Barcelon. Hi, Paolo. Go ahead.
Good morning, Maiki. Maynilad's IPO raised over 34 billion pesos, majority of which came from foreign investors such as the Asian Development Bank and the IFC. That amounts to over 18.4 billion pesos, over half. Proceeds of the said IPO will fund Maynilad's capital expenditures requirements as well as other corporate purposes. President Ferdinand Marcos Jr., just like what you mentioned, has just rang the opening bell of trading today, where he called this listing a sign of the Philippines remaining open for business amid local and global headwinds. Now, Maiki, for his part, Maynilad Chairman and Ultra Bilyonaryo Manuel V. Pangilinan said that the listing is the pinnacle of the MBB Group's leadership of the water utility, which currently serves over 1.6 million customers in its concession zone. Aside from the IFC and the ADB, among the cornerstone investors are the United Kingdom's Foreign and Commonwealth Development Office through its Mobilis program, BDO Capital, BPI Asset Management, Metrobank's Trust Banking Group, and Security Bank's Trust and Asset Management Group. The mood here at the PSE is one of, I would say, cautious confidence. As you know, as we very well know, investors are still trying to find ways to regain their confidence after recent flood control scandals. Now, we're also waiting on some of the other key figures here from the Maynilad Group to try and talk about this latest listing. Mikey.
Okay. Paolo, how's the stock performing so far? It's 10:08. It's just been a few minutes since trading. This is supposed to be a very stable and defensive stock, and it's only Maynilad that could have, come out in this type of environment. How's it doing right now, Paolo?
Well, I've yet to see the numbers so far, Mikey, but right now the mood is a little bit more ecstatic. A lot of when IPOs happen, people are just really happy, especially for this one, the second IPO so far for the year. But I've yet to check the figures. I'll get back to you, and we'll probably check on as the trading day just starts up here at the PSE.
Yeah, it's going to be very interesting to see how this stock fares in this type of economic environment. We just got Q3 GDP that was drastically lower at 4%. It's going to be very interesting to see how Maynilad fares, not just today, but over the short to medium term. Paolo, thank you so much for that report. Over 50 billion pesos is spent on flood control projects in Cebu. Department of Public Works and Highways, or DPWH Secretary Vince Dizon, says Typhoon Tino exposes serious planning gaps. Dizon admits dikes and revetments failed to manage runoff onto Cebu's city rivers. DPWH submits a full project list to the Independent Commission for Infrastructure. It now works with the Department of Environment and Natural Resources, University of the Philippines, and Project NOAA. Project NOAA Executive Director Mahar Lagmay says nature-based solutions like reforestation, rainwater retention, and sponge roads take priority before large concrete structures. President Ferdinand Marcos Jr. orders an investigation into whether deforestation and quarrying are worsening the flooding. Now we're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Friday morning. Right now, the Nikkei 225 is in the red, down by 2% in early trade. Hong Kong's Hang Seng Index in the red as well, lower by 0.7%. Shanghai's Composite down by 0.25%. And Singapore's Straits Times Index going the other way, up by 0.3%. Here at home, stocks staged a cautious rebound yesterday ahead of today's highly anticipated Maynilad IPO and the release of third quarter GDP figures expected, which showed much weaker activity in the third quarter. Now, the PSE index rose 0.3% yesterday to close at 58.35 with value turnover at 5.4 billion pesos. Trading was mostly sideways as investors stayed on the sidelines ahead of the macro data release and the new listing. The market saw selective buying in utilities and property names, with some position taking ahead of Maynilad's IPO, which is seen as a test of appetite for new equity issues amid tighter liquidity and weak confidence. Over the near term, analysts expect trading to remain range-bound as investors weigh today's GDP figures and the outcome of the Maynilad listing and early signs of a recovery in government spending. Confidence is expected to improve only when transparency and execution pick up. Taking a look at the main gauge right now, as of 10:13, PSE index is in the red, tracking the losses in Wall Street overnight, down to 57.95. We're back at the 5,700 level. All shares index in the red as well, lower by 0.4% to 35.28. Taking a look at these sub-indices, a mixed picture. Everything is in the red except for the mining and oil counter, which is up by about 0.5%. Total volume is 529 million shares, valued at 6.23 billion pesos. Market breadth, we've got it bearish at 72, with 72 decliners, 34 advancers, and 50 stocks unchanged. Taking a look at the currency front, the peso opens at 58.94 against the greenback, unchanged from its previous close of 58.94. The Philippine economy expanded just 4% in the third quarter. The Philippine Statistics Authority says that this is below the 5.5% growth in the second quarter. The main growth drivers were wholesale and retail trade, financial and insurance activities, and professional and business services. The Department of Economic Planning and Development points to both supply and demand pressures on the supply side, weaker output from services and industry, plus delays in public construction amid stricter validation and billing rules. They say that was what dragged growth. Private construction and equipment investment also remained muted. On the demand side, household spending eased as typhoon disruptions, lower consumer confidence amid corruption probes, and reduced cash transfer disbursements prompted families to put off major purchases. Now, a shocker for our economy. Our growth slowed sharply to just 4% in the third quarter, well below market expectations of about 5.2%. The biggest drag, weaker public spending and delays in infrastructure projects, despite stronger exports and remittances. Joining us now is Sergio Ortiz Luis Jr., the president of PhilExport and the Employers Confederation of the Philippines. He's here to help us understand what this drastic slowdown means for business, jobs, and the outlook for 2026. Good morning, sir. Thank you for being here with us.
Good morning, Maiki. Good morning to all those who are watching us today.
Yeah, interesting to have you at this junction. We just got the Q3 GDP figures. They came in drastically slower at 4%. Expectations, Deutsche Bank expected it to come in at 5.2%. NZ Research, 5.3%. Capital Economics in London, 5.5%. And Moody's, 5.9%. This from 5.5% in Q2. What are your thoughts upon hearing that growth in the third quarter dropped to just 4%?
I'm not so familiar with the GDP, but the GNP, I know that for the last 25 years, we've not gone below 5%. No? We hit the low end, but on the GDP, I think 4% is rare. That's way below. I don't know if we even hit that during the COVID days.
Yeah, and this is well below the government's expectations for full year 2025 GDP. Our government expected growth to come in at between 5.5 and 6.5%. This This figure is also revised lower. At this point, what are your thoughts on that huge slowdown at 4% in the third quarter, sir?
Well, everybody knows what we have, a problem. No, our stock exchange is low, our investment is low, tourism is also low compared to the others. And I think consumption, we're consumption driven to a certain degree, there is also a slowdown. No? And that is why where I come from, the export industry, we are sort of just plodding along, no? While we are watching our neighbors go
the other way.
Flying.
That's right. We're watching our neighbors go the other way. It just emphasizes how dire the situation is for us. Sir, how much of the slowdown would you attribute to Malacanang's cutting government spending in light of all the corruption probes?
Well, I think it's part of it is government spending, but whether it's cut or not, anyway, the government spending that was cut probably are the ones that are lost to flood anyway. So they don't really go to the economy. So they just cut down on the spending. But I think on the major infrastructure, they're still doing it. No? And that's why I think we're even importing a lot of capital equipments now and materials. Because I don't think the government is slowing down in that area. The cut down on expenses probably doesn't really matter that much because these are probably the expenses where it's lost anyway.
Yeah, interesting that
The
you
corruption.
mentioned they're cutting down on the expenses that would have never gone to the economy anyway, at least for long-term productivity gains. On the exports side, sir, exports were supposed to cushion growth, but given the weak global demand and the tariffs, have they erased our advantage in exports?
Well, we have always said that we are disadvantaged here. No? When the tariff, the reciprocal tariff came out last April, we had a survey and we seem to be okay. But then from the 20 we went down to 19, but all our competitors went from 30-40% down to the same as ours, or some are even lower than us. And we're still trying to understand what happened to Malaysia, Thailand, and that they have zero tariff in many products.
Yeah.
No? These are possibly products where we compete with them in the North American market.
Yeah, we could just react to all of this. Sir, what is the mood? What is the mood among the business community, among PhilExport and the Employers Confederation of the Philippines, given the massive underspending in the aftermath of the flood control controversies? What's the mood? What's the sentiment of the business community, sir?
Well, we're happy that we are now looking at this corruption. We were all shocked at the gravity of this corruption. So we are hoping that many of this budget that is lost in this may go to the sector where we feel it should, no? And among others, I think it should go to export as investment because we have not been investing in export, and to the SMEs. To both sector, government has been playing lip service for the last several years, no? And that is why it's understandable that we are being left behind by our neighbors.
Yeah.
Our budget for export is practically nothing. DTI, who is supposed to be responsible for it, but I understand they were given additional budget, no? But I just do not know to what extent it will help in the R&D, product development, marketing. We send to big exhibitions abroad. No, many of them we even miss because our exporters cannot afford to go there for lack of subsidies, while our neighbors subsidize them. Just to cite an example, yung CAEX, yung China export. You know how many how many exporters Thailand, Malaysia, Malaysia, Indonesia send? More than 200. We sent, I think, about 10.
Sir, what's happening to the SMEs within Philexport in this very challenging economic environment? What's happening to how many of your members are SMEs, and what's happening to them now?
Well, just to illustrate, before, our membership in Philexport keeps on growing, no? To the point of about 4,000. For the first time, we're receiving resignation for the reason that they're closing shop. And many of these are the small ones that's affected by all these headwinds that we're all facing now, no? So it's not surprising, although, as I mentioned earlier, back in April when the reciprocal tariff came out, we had a survey. 90% of our exporters were doing okay. 10%, their buyers in the U.S. are cautious. But now, we're trying. We would like to really find new markets for them. No? But we need assistance really from the government.
Yeah.
And we have not seen it yet.
Yeah. So, sir, you're feeling, are you feeling weaker orders and investment hesitation?
We sort of plodding along. We're still growing a little. Unfortunately, growing a little means we're all being left behind by our competitors, especially in ASEAN.
Okay, what do you want from Malacanang and the economic team to help weather this storm of weak growth and weak external demand?
Well, we would like continuous opening of a negotiation with FTAs, with the EU, for instance, with some other countries, and I don't expect anything to come out in the U.S. at this point of time, no? We don't seem to be the apple of the eye, you know, considering that we're the number one ally, and it looks like they're ignoring us, no? So I hope that it can change, no? Well, we would like the government to really spend the budget on the postings, so that those who are posted abroad, increase the posting, can really help exporters develop their markets.
Okay, thank you, sir. Sergio Ortiz-Luis, that's all the time we have for today, but thank you for sharing your thoughts with us.
Thank you very much also, and thank you for the opportunity.
In news overseas, travel disruptions escalate in the United States as Transportation Secretary Sean Duffy orders a 10% cut in flights across dozens of major airports. The government shutdown there is now in its 36th day, the longest in U.S. history. It has forced 13,000 air traffic controllers and thousands more Transportation Security Administration agents to work without pay. While the government did not name the 40 airports affected, the cuts are expected to hit the 30 busiest hubs, including those serving New York City, Washington, D.C., Chicago, and Los Angeles. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.